Hi guys, we're back with another video of the Nasdaq daily breakdown. How the market moved, what did I see, and what kind of trades did I take? We're going to discuss this today. Not able to make videos continuously right now because I've been a little busy, but I've thought to myself that I'm going to start making these videos more continuously. So let's look out for it. This is the June 1 analysis, so the Monday, the first day of the month. So let's get right into it. So you guys know it by now that I always mark out my previous day high and the previous day low, and I start watching the market from 7 a.m. EST. Now, always remember about the context. So when I look at this market, what I see in the initial stage, even before I came into the market, is a channel being formed. This was the channel. It was a wide enough channel. I think you can make money both sides of the market. You can make it buying, you can make it selling. Of course, if you're looking for very big swing trades, this is not the ideal way to take it. And if you were, then you would be better off looking just for sell trades, because this channel was actually sloping downwards. Though the slope was not really strong, so we could say that it's not a really great pair trend, right? So now we start looking at the chart at 7 a.m. EST. When I came into the market, I was still looking for a little bit of a sell bias I had, so I was looking for trades. Now, when I see this market, I see this, and I know that most of it can break upwards. This becomes my test area first of all, and I'm still looking to take sell trades until I see a good enough evidence that this channel is about to break. So I took my first trade right around here at this high. I took a sell trade below this bar, SL above this. I was looking for a clean 1 to 2 trade, which I didn't get essentially here, and I exited it on a break even trade. Why did I exit it on break even? I didn't exit right here because I could expect a little bit of a movement. It was not far away from my 1 to 2 profit target, so I didn't get money out of this trade. I exited this trade, and then I didn't really take any trade on this high because I was looking for some further evidence. Now, what happened after this that really caught my attention was this breakout. So this was a clean breakout out of the channel, right? So this is the breakout. This is my breakout, and you can see that it's a very strong breakout, strong bear bar, breakout, pullback, continuation. Now this continuation should have led to a further bearish momentum, at least to previous days lows. That was my expectation out of the market, that if somehow it pulls back and gives me a tight channel kind of a structure, I would look for it. But instead, what did it do? The breakout succeeded, the pullback and continuation failed, which gave me evidence that this is not really a bearish breakout. So I was thinking about the opposite trades I could trade. From right here, I wanted to take this bar a bullish trade. So I caught one trade right here, entered on the top of here. I was looking for the low of here, and this essentially gave me a 1 to 2. I was looking for just a 1 to 2 because I knew that even though this is a failed breakout and it could lead to the highs like the test area, but I knew it could come back again too. That's exactly what happened. So I was right to think that way, and that's how it worked out in my favor in a way. When the prices came back here, it now this was, if you're a scalper, right, you can have a lot of trades during the day. But if you're a swing trader, you need to figure out the best trades that would work out in your favor. So if I was a scalper, right, this pullback, this was the second attempt, so I would take another shot here. Till where would I hold this shot? I will hold it till here. Why? Because I know that the second best thing that can happen, except for the breakout failing, it will form a trading range, and the trading range would likely be somewhere between here and here. That's my expectation, but didn't happen. Pulled back right to the bottom of this. And if you look at it, and if you're thinking in broader terms and not really have a predefined strategy kind of a thing, you can see that this is clearly a double bottom. This is clearly a double bottom. You can't have a more clearer double bottom than this. So when I got this double bottom, I essentially was still looking to trade near these lows. This candle, before even this candle forming, I was already long from this bar, because I knew that this will form a double bottom. This breakout had already failed, so it was a good enough evidence for me, and my target was the test area of this high. This was actually the best trade that worked out in my favor. A clear double bottom forming, the breakout failing, and then momentum further. Now I did add to my trade one more time in this entire thing, and I'll tell you why exactly. the price is moving bullish, right? Breakout, pullback, continuation, good enough continuation, right? What does after a breakout do? Now each candle you have to understand, you have to mark it out, and once you start doing it every day, you'll be, you'll just understand every basic of it. This is the breakout. This is exactly the breakout. Actually, you can consider all these three bars a breakout, right? Why can I consider till here? I can consider this a breakout. Why would I consider this a breakout? I'll tell you. Because none of the bars could actually close below the low of the previous bar. This also just tapped it. But this was my first pullback, clear pullback. What does pullback do after a breakout? It forms a range. It forms a channel. Sorry, it forms a trading channel, a tight trading channel, very clearly tight trading channel form. Now, right here, when the price came around here, I was expecting a little bit of a reversal. So if this would reverse right here, I would essentially exit at my break even, because this would tell me that the market is still going to continue to range instead of actually going up, right? This channel, tight channel. But once the market could not close even below these bars bodily here, then I entered one more position essentially here. I wanted to take like another trade right here, and I think on the close of this bar I entered one more position. My stop loss was below this bar, right? All these wicks, because they could wick out again, and my TP was still again right here. Now, you would say this is not a 1 to 2. You're exactly right. This is not a 1 to 2 trade. But why did I take it? Because I was adding to my winning positions. That's what you have to do. You have to understand that when you lose, you have to lose small. And when you win, you have to win big. Like here, if I held on to the position, maybe it worked out in my favor, right? In the sell trade. But I didn't wanna risk it, because this was never the best setup for me for the day. I could have gotten better setups, and that's what my understanding was for the day. And that's exactly what happened. I got two good buy trades right here. This tight channel. Now, I've told you a couple of times by now, tight chart tight channel breakouts typically fail, right? So this breakout essentially would have led to a failure. But what happened? If you just enlarge this, right, you can see that it actually bounced from the low of the channel line. It made it a wide channel. This channel became the wide channel. Now, even without knowing anything further, right, since I know that what is happening and I have a good enough handle on it, you can see the breakout above this channel failed. It couldn't resist it. Like, this was the last attempt where the bulls said, okay, we're going to try it, keeping going more up. But actually the bulls failed. And then you can see what a strong pullback it was. Now, you could already have known everything, all this part, if you would just mark out these levels, understand your biases, understand your relationship with the price, what is happening, why is it pulling back this much, why did it pull back, and stuff like that. So that is what you have to do every day. You have to mark out your levels. You have to understand what the price is doing, why is it doing. It is as important as why price is going up as much as it is failing. Like right here, if you look at it, right, if I look at it right here, most people would say this was a good enough sell point. Why? Because you would expect a range, price moves up here, it is formed a couple of wicks, so the buy momentum is low. But I knew that since the price couldn't even close below this, if you couldn't even close below the EMA, right, so this was a good enough point to buy it again. This was again the exhaustion. Price came back, forming a pullback, and then reversed up. Any moment of the day, if you would have taken a buy trade, you would have made money out of it. So that's the understanding that you need to have about the market. Every day, each day, you have to come into the market, look at the previous context, mark out your levels, see what the market is doing, and then act according to that. There will be break-even trades, there will be losing trades. You don't need to worry about that. You just need to maximize your advantage when you're winning and minimize your losses when you're losing, right? Okay, guys, see you. Take care. If you like the video, please like and subscribe, and I hope to see you in the next videos. Bye.